Hello guys, I'm Paras, the options guy, and welcome to the No BS Trading Podcast. I hope you guys are doing great, and this is episode number 31. Welcome back, and a very happy new year. I hope you guys have a great 2025, and I hope you guys do something, big with your life, or just do something good. But anyways, let's just start with today's episode. If you see, nothing really much to talk about. There are a few events in the next week which we need to look forward to, and a couple of IPOs also which are going to come in our markets, and I'm going to tell you if you should apply to them or not. But aside from that, a pretty chill week that went by, mostly because it was New Year and there were not really any sort of events to talk about, and nothing really also, like unexpected happening in the previous week. So, yeah, without any further delay, let's just start with the episode and we will talk about all of these things in more detail just shortly. Now talking about what happened in the previous week, nothing really happened in the previous week because again everybody was in a holiday mood. It was the new year, so nothing really, not any sort of a big news flow in the market, and nothing unexpected also happening except for one thing, that one of the, you can say, renowned investors in India, Ketan Parekh, was caught in a front running scam. Now what is front running? Very simply, let's say I'm going to buy a huge quantity of shares in the market, right? So if I go on to buy a huge quantity of shares in the market, the price of that share will start to move up, right? The share that I buy, right? Now what I do is that I tell my friend beforehand itself that I'm going to buy this share. You go ahead and buy a small quantity before me itself, so that when I buy those shares and the price starts to move up, you can profit off of that price moving up, right? And that is known as front running, and this is illegal not just in India but anywhere in the world. And Ketan Parekh was caught front running two of very big funds of a very big investment group. Anyways, I don't care about the details because I don't care about this whole situation itself, because again this situation will not affect the markets at all. If you're thinking that markets will crash or anything, that will not be happening. Okay, so anyways, again, not even any individual stocks will be affected, but yes, without except for this, nothing really happening. So let's move on to what is going to happen in the next week in the markets. Now, talking about what is going to happen in the next week, first of all, on Wednesday, we have the FOMC meeting minutes, the Federal Open Market Committee meeting minutes. So, basically, the US Fed will come, the members of the US Fed will come and talk about the economy, and we will get to hear a few insights from them as to what they think about the economy and other stuff such as inflation, monetary policy, and all that stuff. So, keep that in mind. The biggest thing that you will need to look forward to is the slowdown in economy as well as inflation. These are the two biggest things that you need to look out for. What are the comments of the FOMC on these two things will be very important in moving the markets, and they will come out at Wednesday night in India, actually at 12:30 a.m. on Thursday in India, but it will be a Wednesday in the US, right? But aside from that, after that on Friday we have the unemployment rate data for the month of December, and it is expected that it will stay the same as the previous month at 4.2%. Now, as I said, that unemployment will definitely rise, and you see, unemployment moves in sort of cycles. So go ahead and open the chart of unemployment, US unemployment of the last, you can say, like of a century or something, of the last 100 years, or however far you can go, and you will see that unemployment always moves in cycles, right, in a wave like pattern, and we are now in an upcycle over here, right? So now unemployment will start to move up, and whenever unemployment crosses its 36-month average, which happened a few months ago, in sort of mid 2024, you see a very big spike in unemployment, and I think this spike will definitely come, and chances are, in my opinion, that we will definitely see a higher unemployment going forward in the next few months, as the US economy also starts to deteriorate and we see cracks coming. And if you want to know what are these cracks and stuff, go follow me on LinkedIn. The link will be in the description. Go follow me on LinkedIn and read my articles over there. You will get to know a lot of things that nobody is talking about. Really, nobody is talking about these serious things, but you will get to know all of those if you go ahead onto my LinkedIn profile and check out my articles. Anyways, that was it for the next week. The major events that you need to look out for. Aside from that, I don't really think that you need to look out for anything. But yeah, after that, let's move on to the IPOs that are coming in our markets next week, and if you should apply to them or not. Now, talking about the IPOs that are coming in our markets next week, we have two IPOs. And first of all, let's talk about Standard Glass Lining Technology. And this is a 410 crore IPO, out of which 210 crores will go to the company, and the rest 200 crores will go to the promoters who are selling their stakes. So, should you first of all apply to this IPO for listing gains? And the answer to that is yes, because the listing gains currently is at 62%, which is very nice. And I don't expect the listing gains to go below 40%, which is our threshold, as you know. So definitely you can apply to this IPO for listing gains. Now, talking about the company, and should you apply to this IPO for investment? And the answer to that is, let's look at it. So Standard Glass Lining Technology is a specialized equipment manufacturer for pharmaceutical and chemical sector companies in India. They have many big companies, clients from the big companies such as Piramal Pharma, Natco Pharma, Suven Pharma, and many such you can say renowned companies. And the companies and this company is like a preferred partner for those companies. So this is a very good thing. Anyways, one thing which is very good is that this is a specialized equipment manufacturer, which means it enjoys a bit of a niche market, you can say, although the market is not small in any sense. But definitely this is a good thing that it is a niche equipment manufacturer. So the company provides a sort of an all-round solution from engineering, manufacturing, assembly, installation, and all that stuff under one roof. So you don't have, so this is again a bit you can say an advantage when you are a company who is manufacturing engineering equipments, because your clients then would not want to go to other companies to get half of the other stuff done, right? All of it can happen from you itself, which is very good thing. So uh, the the market that the company is servicing to is pretty big, in my opinion, and there is still a good growth left that the company can achieve even in this market. So definitely should you apply to the market is very big. And talking about the financials of the company, if you see, in FY22 revenues were 241 crores, in FY23 they went up to 500 crores, and in FY24 they went up to 549 crores. So very good growth, although you might see that the growth is slowing down a bit, and that is fine as compared to FY22 to 23 and FY23 to 24, right? So that is fine. But anyways, the growth is the company is still steadily rising, and that is also a good thing. And on the other hand, if you see, in FY22 profit after tax was 25 crores, it jumped up till 53 crores in FY23, and in FY24 it jumped up to 60 crores. Now this is a good thing, which you will see over here, is that the profit margins are rising slowly but surely. They are rising, which is again a good thing for the company. I think going forward, once they get this get the IPO proceeds, and they will also reduce their debt up to certain extent, which is I'm sorry, which is 129 crores as of now. So if they reduce their debt up to a certain extent, this will also aid the profit margins of the company. So I think going forward, the company is poised for a good growth, although I wouldn't say that the company is poised for an explosive growth in any sense, because it operates in the pharma and chemical sector, and I wouldn't say those are sectors which are going to blow up or anything. So yes, the company might get new clients, because of which new orders, because of which the revenue might grow. But going with the standard scenario, I don't expect the company to grow very fast or anything, but definitely I expect the company to grow with a good pace going forward. Okay. And on the other hand, if you see, the post IPO PE will be at 38, which is it's not the best. However, it is also not very bad at all. It is actually a little less than its competitors, like other competitors. I forgot the name, but yes, when I was researching about it, I found out that the IPO of this the IPO of this company will be not as high as other competitors at this price of the IPO. So definitely, in my opinion, a good company to apply to. You can keep this company for the long term in your portfolio. It will give you a specialized, or you can say a derivative play to the pharmaceutical and chemical companies. So if you are not sure as to which company should you invest in, the pharmaceutical or chemical sector, it will sort of give you the derivative play. I'm not saying that it is completely correlated to those industries, but definitely if you want to take benefit of the growth from those two industries, then definitely you can look forward to applying to this IPO, and investing in this company for the long term. Now let's move on to the other IPO, which is Quadrant Future Tech, and this is a 290 crore IPO, out of which everything will go to the company. Good thing to see this. But yes, let's first talk about the GMP. Should you apply to this IPO for the gray market, for the listing gains? And the answer is that as of now, the GMP is not available for this IPO. So as of now, we don't know how much is the gray market premium and how much could we expect the listing gains, right? But what you can do is that if the GMP of the IPO comes out and by the last day the GMP is above 40% or at 40%, then you can think about investing in this IPO, or else just leave it. And in my opinion, it is better if you are applying for listing gains, only apply to standard tech, okay? Because first of all, in standard, not standard tech, standard glass lining, okay? Apply to standard glass lining for listing gains and not this IPO, because first of all, the retail portion in standard glass lining is at 35%, whereas over here it is just 10%. And at the same time, this IPO Quadrant Tech is also smaller IPO, which means the retail portion which most of you are going to apply to is going to be much bigger in the standard glass lining IPO, which means the subscription will be lesser as compared to Quadrant Future Tech, and which also means that your chances of getting allotted will be slightly more higher in standard glass lining. So if you want to apply for the gray market premium, I would say apply in standard glass lining. Don't apply in Quadrant Future Tech. But anyways, if you have a lot of money and you want to apply, then think about applying. But as I said, wait for the last day of the IPO. If you see that the gray market premium is at 40% or above that, only then apply, or else don't apply. So that is it. Now let's move on to the fundamentals of the company and if you should apply to this company for investment purposes. So what this company does is that it develops train control and signaling systems. Now you must have heard about the Kavach system that is being implemented in our Indian trains, right? It is sort of you can say a train safety system, right, which ensures that trains are running smoothly and stuff, and there are no collisions between trains and stuff, right? And this company also has a specialty cable manufacturing facility. So some cables which are not used in everyday work and are used in specialized cases, the company also manufactures those. So overall what you can see is that this company is also a derivative play of the railway sector of India, okay? Because as the railway sector grows, the need for such specialized train control and signaling systems will also grow. And also the you can say the government of India has also allocated, I think, 557 crores for the Kavach system, which is again a very big number for the last FY. For the last budget. Now this year we'll need to see how much they allocate, but anyways, if you see the companies, what this company is doing is basically providing control and signaling systems, right, which is again a very important part. And I think going forward the government will definitely focus more on this stuff to improve the safety of trains, because given that if you look at in the last 2 years, the number of you can say train collisions happening in India, or train accidents has gone up. So I think this can definitely be a good thing for this company. But let's look at some other things also, because that is not it. Now if you see in the revenues of the company, In FY22 the revenues were 104 crore, FY23 it jumped to 152 crore, good thing. But in FY24 it has gone up to it has actually gone down to 151 crores. So pretty much stagnant revenues, and going forward also if you see, the company is not expected to give a very exponential growth, right? As of first half of FY25, the growth is not exponential. Also the company has made a loss in the first half of FY25 of 12 crores. So talking about the profits also over here, if you see, in FY22 just 1.9 crores of profit, in FY23 13.9 crores, and in FY24 14.7 crores. So profits and all of that is also slowing down, which is indicating is that maybe company is not getting as many orders from not getting as many orders. Now that could also be because of the incapability of the company itself. But in my opinion, I think what is happening is that the company, I mean, it can happen because of the incapability of the company itself, or it can also happen because of the general slowdown in the sector of railways, and it might not be getting so many, you can say, big orders, right? So in my opinion, what should happen over here is that uh, let's wait before applying. Okay, let's wait until the budget is out, and if in budget there is a very good announcement about, let's say, like train control and signaling systems, about the Kavach, basically this Kavach system being implemented in even more trains, then you can think about investing in this company, because then there will be a fundamental change in the market of the company and the potential growth potential of the company. In my opinion, as of now, it is better to stay away from the company, because right now the financials are not looking that good, and there are just other players in the market or other listed companies in the market that you can invest in if you want to get a much safer play in this whole railways, basically in this whole railways, right? Or a bit of a twisted play in the whole railway space. You don't want to invest in the conventional railways, in the conventional railway theme. So then you can think about investing, but I mean, then you can think about investing in companies like this. But still, in my opinion, don't invest right now. Let's wait for a few months, and then if there is a bit of a fundamental change in the market of the company, then we can think about investing in this company. But as of now, I would say avoid and let the company, just avoid the company is what I would say. Now let's move on to the market analysis for the next week. Now talking about the market analysis for the next week, if you see Bank Nifty moving down 0.6%, whereas Nifty moving up 0.8%. So a bit of a deviation over here, but still if you see over here, Nifty and Bank Nifty both have taken a good support from lower levels, right? So what can we do for next week? Now if you see Bank Nifty in the daily chart over here, and also let's first of all look at Nifty, then we'll come to Bank Nifty, because Nifty is a bit more interesting. Now Nifty has taken sort of a support from this zone over here. If you move the zone up a little bit till 23,500 and consider 23,500 as a support level, Nifty has taken support from there and is given a very good move. On the other hand, if you see Bank Nifty, it has taken a bit of a support from 50,500 levels, right? And it has also given a good move. But on Friday, if you see, Bank Nifty has moved down again by 1.2%. So what should we do in this situation? So let's first talk about Nifty. Now the way Nifty has moved up over here, it is indicating maybe there is a bit more movement on the upside that is left till 24,800, and then maybe we might again take resistance and start to move down. Okay, so that is one thing. But how do we know if it is going to move up till there? Very simple, 24,200. If we do not break 24,200 fast, chances are maybe Nifty might again come back down, because if this is really a good buying, we should break 24,200 and start to move up in the first 1 or 2 days of the next week itself. And on the other hand, if you see Dow Jones, Nasdaq and S&P, both of all of these three indices are up heavily. So definitely it looks like Nifty will also open with a good gap up. Now what should happen is that when we open with a gap up, this gap up should sustain at higher levels over here. So let's say we open somewhere near 24,130, 120, 140, 150, all these levels right over here. So over here, what should happen is that we should not see again a very big selling, because if we are seeing a very fast selling coming from there, chances are that market might not be ready to move up, rather it might start to move down, right? So if we are sustaining at higher levels, then there are good chances that we might start to move up over here and start to go up till 24,800 to 700 on the upside. That will be our target. And the best thing would be to see how fast is the market breaking 24,200. Is the market breaking 24,200 with the same strength that we've seen over here? If yes, then you can aim for 24,700 to 800. Now that is one thing. Talking about Bank Nifty over here, if you see, Bank Nifty is not as good as Nifty over here. Bank Nifty looks very bearish, and now we cannot even take a short position, because if Nifty starts to move up, then Bank Nifty will not really go down with a good amount of flow over here. So what should we do over here? It's very simple. Let's first of all see what Nifty is doing, and in Bank Nifty, let Bank Nifty break 50,000 for basically this low that it has made over here of 50,500 or 470, whatever. And then once markets break this low and sustains, then we can aim for a bit of a 7 to 800 point move on the downside. But until then, let's wait and watch. If on Monday, let's say Bank Nifty makes another sort of a very bearish candle like this, then we can continue to stay bearish in Bank Nifty, and then we can aim for a lower target of 49,000, you can say 750 to 600 on the downside. This will be our target. Okay, basically this support over here. Okay, on the other hand, if Nifty opens with a gap up and sustains at higher level, chances are Bank Nifty will also open with a gap up and stay in this range itself over here, right? And then we cannot really do anything. Now the real buying that will come in Bank Nifty will only be above 51,700 to 51,800 when we break this resistance that we made over here. So I'll just make it for you guys. I'm sorry. Yeah, this resistance over here, once we break this resistance, that is when Bank Nifty can start to move up and probably go up till 52,500 on the upside. But until then, chances are Bank Nifty might stay volatile and in a bit of a range over here. So I hope you guys understand how the market is going to move for the next week. I think next week we will see a bit more volatility, so it is better to first of all get a clear view next week and see where the market goes, and then make any sort of a directional view on the market. So yeah, that was it for the market analysis for the next week. So yeah guys, that was it for this week, and thank you very much for watching till the end. I really appreciate that you waited till the end and watched till the end of this episode. And I hope you guys enjoyed this episode. I hope you guys learned something new from this episode. But if you have any sort of suggestions for the podcast in general, or also for the episode, if you want something added, if you want something changed, do let me know in the comments, or you can also DM me on different platforms, be it Instagram, LinkedIn, and anywhere, right? And I will make sure that I will try to make those changes in the podcast. But yeah, anyways, I hope I'll see you guys in another week in another episode. Bye bye.